Glad to have you back. The show's Capital Market and the broadcast is coming your way from the award-winning television station Channels TV. Now let's take a look at the equities market performance for this week that has just ended. And we see the Nigerian equities market ended the week on a positive note, boosted by the better-than-expected half-year earnings from GT Bank and Access Bank. The all-share index closed 1.48% higher at 28,642.25, while market capitalization also grew to 9.49 trillion naira. Total volume traded rose by 14.06% to 1.37 billion shares, worth 12.94 billion naira, and traded in 16,915 deals. Unilever led the gainers chart for the week with 10.23%, while Champion Breweries was the topmost loser with 19.53%. UBA, Access Bank, and FBN Holdings maintains the top positions by volume, collectively accounting for 40.66% of total volume traded during the week. Now, if you're an astute investor, it may not be news to you that mutual funds are now trending in the capital markets. In fact, some fund managers have opened IPOs on their security with a view to list in the future. Now, these are not Ponzi schemes, but mutual funds that can help preserve capital for investors. We're joined now by Olafisayo Ogunbiyi Badaru, who's the head of asset management at Cadras Capital, to give us insight into this trend. Thank you so very much, Fisayo, for coming to Capital Markets.
Thank you.
It's really good to have you. Let's look at mutual funds at the moment. We know that there are unit trusts among them, but tell us generally what we quickly what we mean by mutual fund.
Okay, mutual funds are collective investment schemes registered and approved by the Securities and Exchange Commission. Basically, what is a collective investment scheme? It allows different investors to pull money together, right, and it will be invested on their behalf by a professional fund manager, which is the reason why you're seeing mutual funds in the market right now.
And this goes into low-risk assets.
Well, there are different types of mutual funds. There are the mutual funds that basically invest in equities. Yeah. There are those that invest in real estate. There are those that invest in fixed income instruments. And then there are the money markets mutual funds. And then you have the ones that are balanced mutual funds. You can have any type of, once you have an underlying instrument, you can have any type of mutual fund. Okay,
thanks for that brief. So why are we now seeing that resurging in the markets at this time?
Well, just like I explained earlier, because it's a collective investment scheme. I'll give you an example. The pension fund, for example, which we just watched recently, if you notice, the pension fund industry has grown from zero to almost 5 trillion or 6 trillion. In the last couple of years. Yeah. And this is because people have been able to pull money together. The pension fund asset managers have been able to pull money together from people's future pensions. So then you have the other asset managers who are actively portfolio managers, not for the future, but for the present. And also because you have the meltdown that happened in 2008, a lot of investors got their fingers burnt, just because they don't know so much about the market. So what you will see is to trust your investments into a proper portfolio manager, right, whose job is to manage actively your portfolio. So that's why you see more people trusting fund managers to give their investments to.
So, but then, some will argue that technically one of the reasons why we're seeing these mutual funds in the market is because fund managers like you need credit enhancement. Is that correct? As a result of the short-term, low-risk opportunities that we now see in the treasury bills market?
Well, just because you're asking different questions about there are different mutual funds. So if you're asking this question, you're being specific about the money market mutual fund.
Absolutely.
Yes, there are more of that in the market because it's low risk, like you said. Capital is, I would say, a little bit more, you can preserve your capital, unlike if you invest in an equity mutual fund. So maybe that's why you see more of, because to be honest, quite a number of investors are still very risk averse. And to manage risk and to manage that risk profile, That's why you have more money market mutual funds coming into the market now than before. And also because of the performance and the returns that it can give to investors. It's easier, it's low risk, and it's liquid.
Okay, so let's talk about returns on capital, because that's an area that a lot of people are often concerned about. Talk to us more about this. Some people are offering 13%. Like you said, yes, they're diverse, but then, how do you arrive at these rates?
Okay, if I give, because also, like you said, you want to diversify your portfolio, you want to diversify your earnings, your risk, and you decide to buy a money market mutual fund, for example. Usually, the underlying instruments that a money market mutual fund can invest in are T-bills, treasury bills, commercial papers, bankers' acceptances, and bank deposits. And if you have a mix of this, I'll give you an example. So, for example, you have just 1,000 naira to invest, and you go to the market. You can only buy a basket of oranges. But if we contribute money together with some other people, and we go to the market, we can buy pineapples, we can buy oranges, we can buy pawpaw, we can buy so many other things, and we blend it together, and it gives us a smoothie. That's what a mutual fund is about. And that is why you have different fund managers who have different performance. So that's why you have different returns. So basically, also because the interest rates in Nigeria right now is a little bit kind of attractive. So that's why you have those kind of returns being offered in the markets at 13%. But typically, you have different fund managers trying to impress the investors with the different types of returns.
Okay, thank you so much. So let's quickly shift our attention now to the African exchanges and take a look at what that came in with this week. We had the BRVM, which came in at 283.42 in terms of index level. Daily return was 0.83%, and the weekly week-to-date analysis shows that it is in the negative territory of 1.0%. Year-to-date is negative as well at 6.9%. The Dar es Salaam Stock Exchange in Tanzania is also at an index level of 2,674 points, while the daily return was 0.05% for yesterday, Friday. Weekly, it shows 0.2%, and of course 4.2% in the year-to-date figures. Johannesburg Stock Exchange also looks in the negative territory. It's contracted to 52,772 points, with having dropped yesterday by 0.41%. The Egyptian Stock Exchange is also 8,317, with a daily return of 0.36% and a weekly return of 0.4%. However, the year-to-date looks positive at 16%. Now, after the break, Visaya will take us through what investors' confidence look like amid the widespread mutual funds playing out in the markets.